Hello and welcome back to the Note. Coming to you on location today from Scottsdale, Arizona, where I'm covering the ETFs and indexing conference. Now, back in New York and the city, all the action revolved around reacting to two big events that came on Friday. First of all, OPEC's decision not to enforce supply limits in the oil market, and secondly, Mario Draghi's speech in Wall Street, where he made clear that he thought that he could expand the ECB's balance sheet without limits in an attempt to push up inflation. I'm trying to undo some of the damage that was done from the very poorly received announcement on extending QE that was made on Thursday. Now, in terms of the Draghi speech, it certainly had an effect on the European bond market, which is where you would think it would have the biggest impact. Many government bond yields for over 10 years dropped by more than 10 basis points. Even German bunds dropped almost that much. The euro also weakened, although nowhere near enough to counteract all that happened on that very dramatic day on Thursday. Now, the reason perhaps that it didn't have more of an impact, and it certainly didn't have that big of an impact on the stock market, was from OPEC. That led to a really savage sell-off in the oil market. Took the WTI crude price down to a new low for the year. It created a new, very dramatic sell-off in S&P 500 energy stocks and helped ensure that the S&P had a very poor day. To some extent, you could see OPEC counteracting what Mario Draghi was trying to achieve. What Mario Draghi was trying to say is, whatever happens, I am going to force inflation up. What perhaps investors heard even more clearly from OPEC is that whatever happens, for the time being at any rate, the moves in the oil price, the lack of an OPEC working in its normal, traditional fashion as a cartel, that oil price is going to force inflation down. That seems to be where the balance of forces is at the moment. The market seems to be slightly more scared about the lack of an OPEC than they are by Mario Draghi.